Welcome back to the channel. I'm Algabot, and every video here breaks down a real MetaTrader 5 expert advisor in plain, practical language. Today we're studying a strategy called Sequential Setup Reversal. It's a price-action approach inspired by Tom DeMark's sequential setup counting. No moving averages, no volume, just the geometry of closing prices measured against their own recent history. By the end, you'll understand how it counts an exhausted trend, how it times a potential reversal, and how it manages risk with volatility-based stops and targets. This is educational content only, so let's dig in. So what exactly does sequential setup reversal do? At its heart, this expert advisor is a counting engine for exhaustion. Most trend systems try to jump aboard a move while it's strong. This one does the opposite. It patiently waits for a trend to overstretch itself and quietly run out of participants, then looks for the market to snap back toward fair value. That makes it a mean reversion or counter-trend approach. Here's the clever part. Instead of comparing each closing price to the one right before it, the strategy compares every close to the close a fixed number of bars earlier, 4 bars back by default. That small lag is deliberate. It lets the strategy ignore tiny bar-to-bar wobble and instead measure whether price has been genuinely drifting in one direction over a sustained window. When 9 bars in a row each close below where price was 4 bars earlier, that's a persistent downward drift, a buy setup. When 9 bars in a row each close above where price was 4 bars earlier, that's a persistent upward drift, a sell setup. On top of the raw count sits an optional refinement borrowed from Tom DeMark called perfection. It asks the market to press to a fresh extreme right at the end of the count, confirming the move truly exhausted itself before we consider a reversal. The signal is symmetric. It has distinct, mirror image rules for both long and short trades. Risk is handled with the average true range, so stops and targets automatically scale to current volatility. It runs on a single time frame, and it was built with liquid foreign exchange swing time frames in mind, such as the 1-hour and 4-hour charts. It suits a patient, process-driven trader who is comfortable waiting for a specific, well-defined condition rather than trading constantly. As always, this is a description of how the tool works, not a suggestion about how you should trade. Let's walk through the mechanics step by step, exactly as the code executes them. First, timing. The expert advisor only acts on a freshly closed bar. Every time a new bar opens, it takes the bar that just completed, with its final, stable open, high, low, and close, and adds it to a rolling history. This keeps the logic clean and avoids reacting to unfinished, flickering prices. Next, the count. The strategy runs 2 tallies at once. For a buy setup, it walks backward from the most recent bar and counts how many consecutive bars each closed below the close 4 bars earlier. For a sell setup, it counts how many consecutive bars each closed above the close 4 bars earlier. The moment a bar fails that test, the relevant count resets to 0 and a brand new setup must form from scratch. There's no partial credit. A signal is only considered when a count reaches the setup length, 9 by default. Notice the word exactly. The strategy fires once, on the very bar that completes the count. A longer run of 10 or 11 qualifying bars does not fire again. This prevents the same exhausted move from generating a cluster of repeated entries. Then comes the perfection filter, if it's switched on. For a buy, the strategy checks that the lowest low of the last 2 setup bars is at or below the lowest low of the 2 bars before them. Proof that price pressed to a fresh low right at the point of exhaustion. For a sell, it checks the mirror image, that the last 2 bars pressed to a fresh high. This is the classic location where a counter move tends to begin. Only when both the count and the perfection check agree does the strategy prepare an order. It also insists on holding just one position at a time for its magic number, so it won't stack trades on top of each other. Finally, risk. The strategy measures the average true range over 14 bars to gauge current volatility. For a long, the stop is placed 1.5 ATRs below entry and the target 2 ATRs above, roughly a 1.3 to 1 reward-to-risk ratio. For a short, those distances flip to the other side. Because everything is scaled to the ATR, the trade is given room proportional to the market's current noise, and the position then rides its stop and target to completion. Remember, a stop loss defines where the idea is wrong. It does not remove risk, and losses are a normal part of any method. Let's read the meta-editor code on screen. At the top are the inputs, the dials you can adjust. Setup length is 9, the number of consecutive qualifying bars that complete a setup. Comparison lag is 4, how many bars back each close is measured against. Require perfection is 1, which switches on the fresh extreme filter. ATR period is 14, and ATR stop multiple and ATR target multiple at 1.5 and 2, size the stop and the target. Lots sets the order volume. In the signal block, the code calls count setup twice, once for a buy, counting closes falling versus 4 bars ago, and once for a sell, counting closes rising. Then buy signal is true only when the buy run equals the setup length and perfection OK confirms a fresh low. Sell signal mirrors that for a fresh high. Whichever is true is passed and enter. Now the buy branch. The code reads the current ask price, then sets the stop loss 1.5 ATRs below it and the take profit 2 ATRs above it. It sends the order with trade.buy, tagged seek setup long. The sell branch is the mirror image. It reads the bid price, places the stop loss 1.5 ATRs above and the take profit 2 ATRs below, and sends the order with trade.sell, tagged seek setup short. Notice how compact this is. There are no indicators driving the entry, only closing price comparisons and, for exits, the average true range. Both directions share the exact same structure, just flipped. That symmetry is what lets the same logic read both an exhausted downtrend and an exhausted uptrend. Let's bring the whole idea to life on the chart. Up top you can see the candles, and in the lower panel we're plotting the strategy's real engine, the DeMark-style setup count. The green line is the buy count, the red line is the sell count, and the dashed gold level marks 9, the point where a setup completes. Watch the left side of the chart. Price is drifting steadily lower, one candle after another. As our window opens, the count is already partway up, because this quiet slide has been underway for a few bars. Each new candle closes below where price sat 4 bars earlier, so the green by count ticks higher. 5, 6, 7. This isn't a dramatic collapse. It's a slow, persistent slide lower, and that's exactly the kind of overstretched, one-sided move the strategy is designed to detect. Now look at the last 2 candles of that decline. They push to a fresh low, dipping below the lows that came just before them. That's the perfection filter being satisfied. The market pressed to a new extreme right at the moment the sellers were running out of steam. On the very bar where the green count touches 9, the setup completes and the buy entry marker appears. The strategy isn't predicting, it's responding to a specific, fully formed condition, 9 straight lag lower closes, capped by a fresh low. At that entry, the expert advisor measures the average true range and builds its risk around it. The stop sits 1.5 ATRs below the entry, tucked under that fresh low, and the take profit target is set 2 ATRs above, a reward to risk of roughly 1.3 to 1. Now follow the next few candles. Price stops falling, turns, and begins to climb. Those green recovery candles carry price up until it reaches the take profit target, and the long trade closes for a gain in this illustration. Here's the elegant part. That very same rally that paid the long is now building the opposite setup. As price pushes up, each candle starts closing above where it was 4 bars earlier, and the red cell count begins to climb. 3, 4, 5. The move that rescued the downtrend is now becoming an overstretched uptrend in its own right. Watch the count keep rising as the candles march higher. 6, 7, 8. The buyers are now the ones getting exhausted. On the final push, the last 2 candles print a fresh high, poking above the highs just before them, satisfying the perfection filter on the short side. The instant the red count reaches 9, the setup completes and the sell entry marker appears at the top of that climb. The risk logic mirrors the long exactly. The stop loss is placed 1.5 ATRs above the entry, just over that fresh high, and the take profit sits 2 ATRs below. From there, price rolls over and begins to fall, and those red candles carry it down to the take profit target, closing the short trade in this example. So in one clean sequence you've seen the strategy's full personality. It waited for a persistent, lag drift to reach a count of 9. It demanded a fresh extreme as confirmation. It entered against the tired move, not with it. And it managed both trades with volatility-scaled stops and targets rather than fixed distances. A couple of honest reminders. This chart is a tidy illustration. Real markets are messy, and plenty of setups reach the count only for price to keep drifting instead of reversing. That's why the stop loss matters. When a reversal doesn't materialize, the ATR stop defines the exit in advance. No counting method identifies tops and bottoms perfectly, and losses are a normal part of any approach. The goal here isn't to catch every turn. It's to act only on a clearly defined, repeatable condition and to know your risk before you ever enter. That's the discipline this strategy is built around. That's the complete picture of sequential setup reversal. We covered how it counts an exhausted trend by comparing each close to the close 4 bars earlier, how 9 consecutive qualifying bars complete a setup, how the perfection filter demands a fresh extreme, and how the average true range sizes every stop and target. It's a patient, symmetric, counter-trend approach that trades a specific condition rather than a hunch. Remember, everything in this video is educational information only. It is not financial advice, not a recommendation, and not a promise of any result. Trading carries real risk, and losses do happen. If you found this breakdown helpful, please like the video, leave a comment with the strategy you'd like me to analyze next, and subscribe so you don't miss what's coming. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.